You didn't know about day trading? It's a way you can make some money from home. All right, you probably heard a lot of stuff about day trading. You know, that it's only for the rich people. It's all common everyday people can day trade. You probably heard that it takes $25,000 to get started, and you have to have an account with a broker, a big broker, and all kinds of rules. And it's all true. You don't have to have $25,000. I'm starting with $100. I could have started with $50. There's an app that I reviewed called Robinhood that you can trade for free. That's another video. But day trading is, penny stocks. You get penny stocks that run from anywhere from $5 down to pennies, micro pennies, and they fluctuate. They go up and down a little bit here and there. So if you put $100 down on a stock, buy 100 shares at $1, and then it goes up to $1.03, then you sell it. That's how you make money in short bursts like that. It takes a couple hours in a day. The market opens at 9:30. You research your stock, you find something that's volatile, it's going to go up and down, and you trade it, you watch it. It goes up, you make money. Of course, it can go down. That's where everybody gets a little nutty and saying it's gambling. It goes down, and yes, it can go down, and but you have safeties involved, stop loss orders, so that what you do is if you buy the stock for $1 a share and you're expecting it to go up to $1.10 a share, you put a stop loss in at 98 cents. So if the stock drops to 98 cents, it's an automatic sell order. It'll sell your stock, so you've only lost 2 cents a share. So you can lose money, but you won't lose your account. Like, people are freaking out that you can lose all your money and lose all your money in the stock market. And that might have been true back in the crash in the days when that. But now with technology and instant sales and all this other stuff, it's risky. Of course it's risky, but you got to do research, and you can find these stocks and if you watch them for the week, month, you'll see that they go up, they go down, they go up, they go down, up, down, constantly, every day. At 9:30, they'll drop a little bit, you buy it. Then they'll climb up a little bit, you sell it. Then they'll drop it. If you don't sell it when it goes up, it'll drop again, and you'll lose. So, but the trick is you have to sit and watch it. You have to watch the stock market. Some people sit and watch it all day. Some people just watch it for the first couple hours in the morning, make their trade of the day, and they're gone. I know I'm a member of a group, and the average people in that group have about $3,000 in their account, and they trade with $1,000 at a time, and their goal is to make 10% on your money. So if you're making $100 on $1,000, there you go. So that's what you do day trade, and that's very, very general stuff. Okay, searching the stocks, doing your research, learning how to do it. That's another thing entirely. But this is something that you put into your bag of tricks, okay, as one part of the pie, one part of the puzzle of your income, of your work from home, stay at home income. So you do this for a couple hours a day. Okay, if you're a stay-at-home mom, or you're somebody who works a second shift job, perfect for you, because market's open, you're home. You're working a first shift job, it's real hard if you've got an active job to sit and watch the stock market and sell at the right time, buy at the right time. You can do it, and I do it. I don't make the greatest money that I could make because I miss some things because I'm working. So if you're sitting at home, it's a great thing to do. If you're running another app, making money doing an app, making money on a side business, making videos for YouTube, or whatever it is that you're doing, this is just another piece of the puzzle. This is just something else that you put in your bag of businesses, of ventures that work from home, and you can add. It all depends on how much money you're putting into it. If you can put $25,000 into an account, let's say you take your retirement money and put it in there, and you just play around with $3,000-$4,000 at a time, and you're making 10% on your money, 5% on your money a day, not a year, a day. Okay, and Yes, you can lose money, but it does go up and down. So you lose a little, you win a lot. You lose a little, you win a lot. That's the whole. It's risk reward is a big part of it. So you want to risk $1 to make $2. That's the bottom line, right? So that's what you want to do. That's what the goal is, and it's very possible. Now, people get greedy, people get emotional, people, get attached to stocks. This is something that's very general, very cold, and very calculating. It's either there or it's not there. The trade's either there or it's not there. Don't force it. A lot of times you wish something was going to happen, but it ain't going to happen. Right? But that's why you got the risk reward. So it's that when you're wrong, and you are going to be wrong, you're only risking 2% or 2 cents a share or whatever it is you're comfortable losing. Some people risk more because they want to make more. You can get bounced out of a trade easy if a lot of times what happens is let's say you buy the stock for $1 a share, and you put your stop loss order in at 98 cents a share, so that if it drops to 98 cents, it sells, and you're hoping it's going to go to 105, 108 a share. So, but what ends up happening is it'll drop to 97 cents, sell you out at a loss, and then they'll start climbing and go up to where you wanted it to go, and you'll see it'll be a 108 by the end of the day, and you'll kick yourself because you set your stop loss, too conservative. You should have let it run a little bit. So you should have set your stop loss at, let's say, 95 cents. If you're comfortable with losing the 5 cents a share, but with the risk, the reward being, more. So, and all is how you feel comfortable with your risk. Some people risk more. Some people don't mind losing the 2 cents and getting into the next trade to win, and that's the way they do it. But there's a lot of free information on the internet. There's a lot of gurus out there that'll show you how, if you want to spend thousands of dollars on training for these gurus, these guys will thousands of dollars, and they'll show you what you can learn for free on the internet, and you think you're spending $1,000 to learn the secrets, the dirty, dark secrets. Maybe it is, maybe it isn't. I don't think it's worth $4,000. There's plenty of people out there that are giving the stuff away on YouTube. I'm part of a group that's sharing best practices, and there's a blog, and I can turn you on to that. I'm not going to endorse it right now, but so everybody explains what they're doing, how they came to their decisions. No one's telling people what stocks. They're not throwing out stocks and saying, buy this stock, buy that stock, this stock's going up. It's not like that. It's explaining to you, this is what I did, this is not what the mistake that I made, and I'm not going to do it again. Maybe you don't have to do the same mistake. If I'm putting all this stuff up on the blog, on the pages that all these other traders are doing, and you learn from their mistakes so that you don't make the same mistake. It's really good. There's probably more than one community out there that does it, but the one I'm in is free at the moment. And like I said, there's plenty of people out there that'll take your money. There's plenty of information on the internet where you can just get it. You just download it, search it on YouTube. I didn't know what a stop loss was. I didn't know what a trailing stop loss was. I searched it. The information is free. It's out there. Okay, you can pay for a guru. Maybe the good thing about having a guru, you pay $4,000 or $5,000, so maybe you can send the guy an email and he'll answer you. That's always a good thing. But anyway, the day trading, I think it's a good way to make some money. Hey, can you get rich? Yeah, you can get rich, but that's not the goal. The goal is not to get greedy and get rich. The goal is to make a positive income every day, 5 to 10% on your investment, and that's how you're building your money. People who know what they're doing with investments would say, hey, that's pretty damn good, 5% a day. Not a month, not a year, not 6 months, 5% a day on what you're putting in. I think it's worth it. So leave a comment, if you're interested in learning more about day trading. I can turn you on to some other things. I'll be doing other videos, and like for brokers, I'll research some apps and some stuff like that. But so comment, like, share, subscribe, all that happy stuff, and stay tuned for more videos. Day trading is good. I recommend it.